You see it at the pump, you see it at the crude cost, and the second time is the roll-off. The roll-off is $47.5 trillion out of the $9 trillion.
Hi, I'm Justin Bergner, Industrials Analyst and Portfolio Manager at Gabelli Funds. 2 weeks ago, process automation leader Emerson Electric announced that it had prevailed in an auction process to acquire National Instruments for $8.6 billion, or $60 per share, a 60% premium to National Instruments' equity value, prior to Emerson announcing in January that it acquired a 2% stake and was pushing for the company to sell itself. While Emerson had indicated at its November Investor Day an appetite for M&A and an interest in the test and measurement space, investors were hoping it would prioritize M&A and discrete automation. They were certainly not expecting Emerson to deploy the lion's share of its $10 billion sales proceeds to a test and measurement acquisition and at a high price tag. So why did Emerson do this deal, and what does it mean for the automation space, which has attractive tailwinds from infrastructure and semiconductor spend, a favorable normalization of manufacturing capex, onshoring, and a smaller post-COVID labor force? For starters, Emerson has the premier position in process automation and has supplemented that position with a strong software position in process automation. However, Emerson's discrete automation business is only 11% of revenue and largely absent the discrete growth markets of electric vehicle and semiconductor. National Instruments touches customers early on in the design and validation phase with meaningful exposure in transportation and the semiconductor plus electronics verticals. It provides an entree for Emerson to gain exposure to these markets so that it can sell its discrete automation products and services. And Emerson, a solid operator, should have good prospects for meaningfully improving the industry-lagging margins at National Instruments. At the same time, the need to make such a large outlay, 15% of Emerson's capitalization, highlights Emerson's subpar position in discrete automation, which was already on display in the December quarter when its discrete business materially undergrew both Rockwell Automation and Siemens, two key competitors. We continue to monitor the automation space, knowing that the strongest growth trends are in certain North American discrete markets that Rockwell dominates. We look for opportunities to buy Rockwell on a potential 5 to 10% pullback from its recent $275 per share price, perhaps on an underwhelming quarterly earnings print. Rockwell gives one maximum exposure to North American discrete automation with a very strong position in electric vehicles. Their stock, though, is expensive, trading at about 19 times 2023 EBITDA, but they have strong demand tailwinds over the next few years. Rockwell has also been effective in recent years at plugging a software hole with pricey but effective acquisitions. Emerson, on the other hand, is reasonably cheap but has a long hill to climb before it is a major challenger to Rockwell in discrete automation. We would not be surprised if Emerson stock is range-bound for some time. We look for a successful completion of the National Instruments acquisition, execution on cost synergies, and signs that National Instruments is stimulating Emerson's discrete business. Emerson will likely be attractive at some point, as it is also exposed to favorable automation trends, including the energy transition. It has a strong CEO, but needs to make further progress in its own transformation first.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.